Welcome, active traders, to today's pre-market explainer. Let's instantly cut through overnight noise to find actionable market signals.
Three huge catalysts are driving today's skittish action: geopolitics, a glaring tech supply overhang, and fresh CPI data. Look at this. Equities are flashing red across the board, led by a brutal 250-point Nasdaq futures drop. Despite severe U.S. Iran military headlines, we're actually seeing a surprisingly muted reaction in WTI crude oil. So, what does this mean? This tame oil response proves geopolitical fears are mostly noise, not the driver.
The real signal? Massive tech supply overhang. Just look at Supermicrocomputer's brutal 11.8% pre-market plunge.
These supply concerns are rapidly building up toward Friday's massive and highly anticipated SpaceX IPO.
Meanwhile, on the macro front, the May Consumer Price Index report just dropped, and it's pretty warm.
Digging into that report, the energy sector alone drove over 60% of this headline inflation spike.
However, if you strip out energy, the core CPI print actually landed a bit better than feared. But listen, while core inflation improved to 2.9%, that remains uncomfortably above the Fed's strict target. Futures briefly spiked on that core data, but quickly rejected the rally. We're back to looking really skittish.
The takeaway: this macro data absolutely reinforces that the Fed is going to remain on hold regarding rates.
Heading into the bell, Briefing.com's Patrick O'Hare warns traders to really respect this incredibly bumpy price action. With heavy tech supply and the Fed sidelined by sticky inflation, how are you protecting your capital today?